Hey everyone, it is Evan here from the Trade Risk on Tuesday, October 29th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see we had a pretty mixed session today. It was a pretty dull session out there. All of the major indices closing near or close to flat. The Qs underperforming a bit here. I think we had Google earnings and some earnings influencing that, but that was down almost 1% today. Overall, though, over the past 5 days, we are still firmly in green territory right across the board. Qs are, in fact, in front, and we are above all of the key simple moving averages in the major indices. If we scroll down and take a look here at the sectors that are helping fuel this rally, it is semiconductors, tech, and materials at the top of the list right now. On the downside, it is utilities, it is discretionary, and it is staples. And these are over the past 5 days. If we look at major markets, natural gas getting a big pop here, 7%, followed by oil and silver. Nice commodity rally there in general. On the downside, volatility, TLT, and 10-year bonds. So let us get down into the S&P 500. This is the weekly time frame chart. It's where we like to start our analysis. You can see that we broke out to new all-time highs this week. We made new closing highs in the S&P 500. You can see that 3,028 level approximately is where the highs were in July. We nearly tested them in September before the pullback, and now here we are again attempting to sort of break out and make some progress to the upside. Now what you'll notice though is, it is of course only Tuesday, but you can see a little bit of a tail coming on the top end of this week. So it'll be interesting to see. We broke out this week to new all-time highs in the S&P 500. Can we now stay here? Can we get a weekly close at all-time highs? That, I think, will be some good confidence boosters to this market if we can start to get more definitive, more solidified sort of closes and acceptance at these all-time highs. Otherwise, if we don't, then of course last week's highs, which will come in around 3,027, if we continue to move down and fade off of, these highs into the end of the week, then perhaps we have maybe are in store for a little bit of a shakeout here as some of maybe this exuberance gets kind of stopped out and pulling back a little bit to kind of wash out a little bit of this froth. It is constructive to see all of these highs that are happening right now, but we do want to keep in mind, the VIX here is now back down to, let's see if we get to our spot VIX chart. So you can see that the VIX here, even though the market has been breaking out, we get a little bit of kind of a rally going back. We're back above $13, kind of didn't stay at 12 too long. If we look at, put call ratios right now, we're kind of back in that complacency zone, which again, doesn't have to mean that we, turn over and waterfall lower. It just might mean some shakeouts, maybe a little bit of a pullback or some sideways action to digest this nice rally that we've been on for the past couple of weeks now. So if we look here again at the daily chart now of the S&P 500, you can see the fade off of today's highs. You can see again clearing over this recent structure here. So going in through the rest of the week, if we look at the SPY, for instance, too, get a little bit of a gap fill. We got another gap fill down here that are open gaps that we can pay attention to. So it'll be interesting to see again, can the bulls hang in here? And of course, we have earnings season, which is what we're dealing and slogging through right now. So there's plenty of headlines and catalysts to sort of hit this market and move us around. So that is all in all the S&P 500 there. If we're looking at levels, if we switch over to maybe this view here, we're still basically looking at last week's highs to hold above there, which is effectively the new all-time high breakout zone. If we can hang above there, again, the longer the better, more price acceptance, that is constructive. If we fail down here and we come back down into this old range, that'll give us a little bit of a pause, at least just in the short term. All in all, things look pretty good here. If we go to the Russell 2000, you can see we are back to or close to the top end of this year-long range. We've talked about this range for quite some time now. 160 approximately, that is the big breakout zone that has kept the small caps under wraps here for the past year or so of trading. We're getting back to the top end of that range now, so it'll be interesting to get this test in here as well as it works itself back up to the September highs. Last but not least, the NASDAQ 100 was really one of the first to sort of break out here and show some good strength last week. We did get the continuation yesterday, but then you can see the immediate kind of gap fill kind of pullback here on Tuesday's session. So I think this is going to be an interesting tell tomorrow. Does this continue lower? Can the buyers step in and support this breakout zone around 195, or are we going to kind of roll back into this old zone here? So that is the landscape there of the market environment overall. Let's go to some of the other major markets. TLT continues in its slide here now for the fourth week in a row. It is still kind of in a longer term consolidation pattern here, so really nothing new to say about it. We do have the lows that we made back in early to mid-September that are around 136.54, just about a point away from where we're currently trading. So we'll see if we get down there how we act and react at this prior pivot point. If we look at gold, gold here giving up the pop it saw last week. So we started to see a little bit of excitement here in gold last week. On Friday, there was a bit of a failure. Monday, or a little bit of an intraday reversal. Monday, we got continuation lower, and Tuesday, kind of back to sideways. So very much here, gold still consolidating, pretty trendless ever since kind of topping out in late August. So we'll give it the time it needs, but for now, kind of back to the drawing board, back to the consolidation. If we look at silver, it's kind of the same thing here, holding maybe a little bit more of an attempt here to try and buck the downtrend here in the sideways consolidation. It also popped last week, gave some of it back here, and now we're kind of just waiting to see if there's any other kind of an additional push higher here, or is it just back to sideways consolidation. If we go to energy next, we can look at USO here, which is down now on the week 2%. It had a nice push last week, breaking this little triangle pattern here, the series of lower highs and higher lows to the upside. It's giving some of that back right now. Overall, if we zoom out here, it's still very much in this sideways kind of consolidation pattern that it's been in for about 4 or 5 months now. So really nothing has changed there, but a little bit of a short-term momentum has come out of this trade here in oil. Last but not least, if we look at natural gas, we get a big move here yesterday and a little bit of a fade here today on Tuesday, but a nice move yesterday and still progress to the upside here. We talked about natural gas down here with this increase in volume recently, trying to put in this higher low, a little bit of positive momentum divergence. So it does seem like this is trying to stick here and put in some type of short to intermediate term low. Do think it looks pretty good here. The upside, did not get involved in this trade, do not have a position, but do like the prospects here of if you're active, if you're short term, if you're a little more nimble, some opportunity here perhaps. Again, bigger trends in natural gas are obviously still drastically lower. So that is it. That is what I have for the week. Pretty quiet as we go through earnings season, but we do have stocks attempting to kind of make a broad-based breakout. We do have complacency out there, so do keep that in mind. Know your time frame, know what you're chasing and what you shouldn't be, and again, keep an eye out for those earnings. So thanks as always for tuning in and watching. You can subscribe on our YouTube channel, follow us at The Trade Risk. Have a great rest of the day. We'll see you back here tomorrow intraday for some trade ideas.